welcome to this month's 1515 podcast. I'm Chris Capewell and I'm the head of the regulatory team here at Maples. Joining me today, I have my fellow partner, Adam Huckle. Hey, Adam, how you going?
Good stuff, thanks.
Good. And we also have our special guest flown in, especially all the way from Asia, Daniel Moore, who's off council in our Hong Kong office, and he's here today in person to do the podcast. Hey, Dan, how you going?
Good, thanks, Chris. Nice to be here.
Good. Don't sound as enthusiastic as Adam, but maybe you'll warm up. The March edition today, we're going to cover all the latest developments since our last episode in February. There's quite a bit, but I don't think we need to get into too much detail on any of them. We will be covering tokenized funds. There's some updates on beneficial ownership guidance. There's AML and CFT updates. There's an update for the enforcement and supervisory matters for SEMA. We've got a couple of FATF reports on virtual assets that I think, Dan, you're going to talk to. So we'll crack on. As always, if you do want to subscribe, please go to Apple Podcasts or Spotify. So, Dan, to you first. Tokenized fund amendments.
Thanks, Chris. So, yeah, we've had some big news for the industry in that 3 tokenized funds amendment bills were passed as anticipated by Parliament in Cayman on 5th of March 2026. And the framework is actually 3 different pieces of legislation that are all interlinked. So we've got amendments to the Mutual Funds Act, the Private Funds Act, and also to the Virtual Asset Service Providers, or VASP Act. And it's quite big news because together these bills put together a framework for tokenized investment fund structures in Cayman. And as some listeners will be aware, tokenization refers to the digital representation of an investor's interest in a fund using blockchain or similar technology, while at the same time the underlying legal ownership and the investor rights remain as normal. So these structures offer potential efficiencies in areas like record keeping, transfer controls, settlement processes, onboarding, and so on. And for those reasons, they've been increasing in popularity for a number of years. But the challenge was that the absence of express statutory provisions gave rise to some legal uncertainty, particularly around whether the issuance of digital tokens by funds could fall within the scope of the VASP Act. And some actors were concerned that this could lead to dual regulation under VASP and mutual or private funds, with the associated costs and uncertainty that come with that. So following consultation with industry stakeholders, the Cayman Islands Monetary Authority, the Ministry of Financial Services and Commerce all concluded that tokenized funds are most appropriately regulated within Cayman's existing funds framework. Probably the most important amendment is that the VASP Amendment Act clarifies that the issuance of digital tokens by a regulated fund will not constitute a virtual asset issuance under the VASP Act. So that was I think the change that most industry participants were looking for clarity on. In addition to that, the mutual funds and private fund bills introduce a few new statutory provisions for tokenized funds, and that includes specific legal definitions of digital equity tokens, digital investment tokens, some enhanced record keeping obligations, some clarifications around transferability and how that would work, and also disclosure of technology-specific risks in fund documentation. So it's quite a big change. We'll be expecting to be advising quite a lot on this for our clients. Obviously, we're available to do that, and I'd like to pass now to Adam, who will pick up on beneficial ownership guidance.
Thanks, Dan. Yep, a quick update from me on the beneficial ownership regime. So on the 25th of February this year, the ministry published an updated guidance notes on complying with the beneficial ownership regime. And that updated guidance is now available on the registrar's website. And essentially, it updates the existing document to take into account some recent amendments to our Beneficial Ownership Transparency Act and regulations. Now, I think it's worth repeating that our clients and listeners should ensure that they are aware of their own personal obligations, as well as those of their beneficial owners under the current regime. In other words, not just the obligations that otherwise sit with the corporate service provider or registered office. As we previously said on this podcast, and as many others have pointed out, although the regime does rely relatively heavily on the registered office to ensure that the filing of beneficial ownership registers works smoothly, there are numerous obligations under the statute that require legal entities and their beneficial owners to take certain actions, rather than just relying on the registered office. And one of the reasons why that is important is that we have started to see the registrar again reviewing entities' filed beneficial ownership registers and investigating where, for example, the required particulars are still outstanding and the registrar, or the register rather, has been marked with pending status for more than 3 months. And in those circumstances, the registrar will likely seek responses from both the registered office but also from the legal entity itself as to why that beneficial ownership information remains outstanding. And, if no good answers are given to rebut the presumption of breach, the registrar can and often will impose administrative fines, a topic that we'll come back to later in this podcast.
Adam, thanks for that. I think you're going to also mention national risk assessment. There's been some updates there, fact sheet.
Yeah. Moving on to the NRA, the National Risk Assessment, as well as the upcoming CFATF mutual evaluation of the Cayman Islands. So, on the 2nd of March this year, the government here published an updated 25-26 National Risk Assessment fact sheet, which is now available on the government's website. And just as a reminder, that National Risk Assessment is a periodic review conducted by government effectively to assess, identify, and understand the jurisdiction's risks regarding money laundering, terrorist financing, proliferation financing, and targeted financial sanctions. And the fact sheet essentially sets out, it's quite a good go-to guide. It sets out a summary of the objectives, the strategic importance and timing for the NRA, which has commenced relatively recently, and a lot of government agencies are now busy working on it. The document also includes a helpful FAQ section at the back if you're trying to explain what it's all about. And all of this, and the NRA in particular, is part of Cayman's preparations for the 5th round Caribbean Financial Action Task Force's, CFATF's, mutual evaluation of the Cayman Islands, which is scheduled to begin in 2027. One point perhaps worth noting from the fact sheet is that some of the procedural steps, the timelines have been extended or pushed back by sort of 5 months or so, including notably the inherent risk assessment, which now extends until May 2026, so May this year, with the residual risk assessment and the national action plan similarly being pushed back. And that may well be positive news because it gives everyone a little bit more breathing space and allows the potential for more industry consultation. Now, what we'll be doing, Chris, is providing continued updates in future podcasts as to both the progress of the NRA and the mutual evaluation as those go forward.
Yeah, and that's a good point. The risk assessment often does get overlooked, and it's quite a key document, particularly for simplified due diligence. You do really need to know what's happening on the risk assessment. And as you mentioned, the CFATF review that's coming up soon, focus of that will be on effectiveness. And that segues quite neatly into also another update that I want you to touch on, Adam, is some amendments and proposed consultation to more enhanced effectiveness around AML and also sanctions. So do you want to talk on those?
Yeah, you're right, Chris. Ahead of the mutual evaluation, which, as you say, is typically focused on effectiveness, CIMA, so our Cayman Islands Monetary Authority, has circulated to industry for consultation 2 proposed new rules, so capital R rules. The first is the rule on effective compliance program for AML, CFT, CPF for financial services providers. And the second one is entitled the Rule on Compliance with Financial Sanctions and Targeted Financial Sanctions. And essentially, the 2 proposed rules are intended to reflect what is already contained within the AML regulations and the accompanying AML guidance notes, rather than adding anything substantive or new. And the reason behind the new rules, or at least one of them, and as communicated to industry by CIMA, is that one of the criticisms of Cayman during the previous CFATF inspection was that the AML guidance notes were not by themselves enforceable, right? Because in other words, the guidance notes, they set out CIMA's examples and description of, good industry practice. But the only real enforceable breaches were not of the guidance itself, but rather only of the underlying AML regs. And, reflecting the AML guidance in new rules, what that would do is allow CIMA to address that criticism by potentially finding and enforcing, including by way of, administrative fines, breaches of those new rules, as well as, of the underlying AML regs themselves. So from a sort of FATF 40 compliance perspective, that would allow Cayman to show to FATF at the mutual evaluation, that they're paying more attention, or at least, getting up to grips with effectiveness, i.e. the evidence of an enforcement route and program, rather than, just the technical compliance, which is having the rules and the statutes on the books. Now, industry consultation ends, this month or during this month. There have been some recent extensions, I understand. So nothing has yet been finalized. We expect that some of those industry comments will likely be trying to highlight to CIMA where perhaps the current drafting of the rules may go further or not accurately reflect what's currently within the AML regs and the guidance notes. So certainly a topic to watch, and one for our listeners to pay attention to in future podcasts.
Yeah, and we've been looking at that pretty extensively, and we've shared some comments with industry associations. The deadline, I think, is next Friday, so 20th of March. So do have a look at that if you can get access to it. There's going to be some comments to it, but importantly, it does extend to investment funds. So this is going to have wide audience of vehicles that will be captured by it if it comes in full form. So definitely important item. Okay, Adam, effectiveness still the key. Enforcement manual, any updates there?
Yeah, I'm very interested in this one, and I think it's very helpful. So earlier this month, CIMA published an updated general enforcement manual, which is now available on its website. And the main change here is the addition of a new discretionary publication section, and in particular, a new section on, and I'm quoting here, the procedure for discretionary publication of enforcement actions and administrative fines. Now, in the context of any enforcement action by CIMA, one of the key considerations for anyone affected, and particularly our clients, is often whether the process and ultimate finding by CIMA is going to be made public in any way. And there have been multiple examples, as many of our listeners will know, where CIMA has publicized its enforcement successes. And in that regard, the new section in the enforcement manual, I think, is quite helpful because it clearly sets out in one place, firstly, which of the enforcement actions and types are required by statute to be made public, because quite often that's unknown. So, suspensions and revocations of licenses, for example, the statute requires publication, as opposed to the other types of enforcement actions, including administrative fines, where CIMA has the discretion whether or not to make them public. Secondly, the section sets out the process that CIMA has to undertake and the issues it ought to consider before exercising its discretion to publicize the fine or the enforcement action. It also sets out what type of information can actually be made public, and generally what would be, about the fine, when and where that information can be made public as well. So again, really quite helpful, I think, just to be open about that so that everyone knows the process and the position that CIMA has with respect to potential publication of these types of enforcement actions and fines. Hand over to Dan now to talk about relevant updates in the virtual asset and crypto space.
Great. Thank you very much, Adam. Yeah, the FATF has been busy in the virtual asset space and has just released its March 2026 report on offshore virtual asset service providers, or offshore VASPs. And obviously, Cayman Islands being an offshore jurisdiction in which we have a number of operating VASPs, there are some important compliance lessons for that sector, and I think it's mandatory reading for anyone operating in that space. So to briefly touch on some of them, the report is clear that regulators are increasingly looking for compliance officers who are based in jurisdiction, who have unrestricted access to customer information, and who actually hold sufficient seniority to take independent decisions. Now, I'd point out that that's actually something that's required by the Cayman VASP framework anyway. Travel rule implementation is another area. There's been identified as an uneven rollout of the travel rule globally, and that's creating some monitoring blind spots that give rise to risks for VASPs, particularly offshore VASPs. And it's noted that VASPs that proactively implement travel rule compliance, and that ones that can have all that originator and beneficiary information, they'll be better positioned for cross-border compliance. Additionally, it says that VASPs should apply risk-based controls, quite similar to those for correspondent banking. So it's an area where, virtual assets can learn from TradFi in that respect. And that means gathering sufficient information about your counterparty VASPs, assessing their AML controls, and obtaining senior management approval before establishing new relationships, because obviously there is a large amount of VASP to VASP interface in the crypto world, and that gives rise to its own risk. So it is incumbent on regulated operators to assess not only themselves, but their counterparties as well. Additionally, regulators are scrutinizing situations where customers are serviced through pooled or group level arrangements rather than being clearly assigned to the locally supervised entities. And we're aware of this when we're putting in VASP applications. The regulators are quite focused on group level controls and outsourcing. And then finally, for VASPs that are operating across multiple markets, which most offshore VASPs do, you need group-wide AML controls that in every jurisdiction are in line with the FATF requirements. Specifically for Cayman Islands, our regulator CIMA featured in a case study on cross-border supervisory cooperation with the Abu Dhabi global market. And that investigation uncovered some governance failures and unlicensed activities with respect to a particular VASP. And that resulted in that VASP's cancellation of registration and some significant penalties. So that indicates how robust cross-border enforcement is now part of the landscape in the sector and will be going forward. The second aspect of FATF in the virtual assets world was earlier this month as well. They published a targeted report on stablecoins and unhosted wallets, specifically as they relate to peer-to-peer transactions. So just to give some context, peer-to-peer transactions via unhosted wallets, what does that mean? Well, we're talking about direct transfers of crypto, in this case, stablecoins between two parties without any regulated intermediary in between. So that's not a whole lot different to, one individual to another doing a cash-to-cash transaction, which happens every day. However, the bigger risk is because VASPs are global, it's just as easy for stablecoins and value to move globally as it is via unhosted wallets as it is for individuals to exchange cash among themselves, but it's got a much broader geographical reach. So unhosted wallets include things like your hardware wallets, your Ledger, your Trezor, and also certain software wallets that you can install and manage yourself. And there is some evidence to back up these concerns, because Chainalysis indicated actually that stablecoins as a product accounted for 84% of illicit virtual asset transaction volume in 2025. The reason for that is stablecoins have a lot of attractive features for legitimate use. So they're stable because they're pegged to a fiat currency. They're liquid, and they're interoperable sometimes between different coins. But these features also make them really attractive for criminals and for misuse. So again, the report is recommended reading for anyone in the sector. They do talk about some controls that might be put in place in the future. One that's particularly interesting is an idea that stablecoin issuers themselves could have risk-based controls, like the ability to freeze or burn or withdraw stablecoins if there's any suggestion of illicit use. Also, for operators in the crypto sector via smart contracts, there's also an opportunity to put some controls in place there, like allow listing, deny listing, and so on. So again, certainly an example of the FATF zeroing in on what they consider to be high-risk sectors. And again, recommended reading for anyone in the space. So I think that closes us out. I'm going to hand back to Chris maybe to take us.
Yeah, thanks, Dan. Very interesting. You obviously got a passion for that, and lots of movement in that area as well. So interesting to see where that goes. Adam, thank you for your insights too. Just before we do close, I did want to remind everyone on CRS, which is the Common Reporting Standard. To the extent you haven't already looked at appointing your principal point of contact in the Cayman Islands, please do connect with us or your other service providers. We're seeing a tremendous amount of interest in that with clients. So do have a focus on Common Reporting Standard. And we're seeing a lot of inquiries from the tax authority here relating to CRS. And with that, thanks for listening, everyone. Special thanks, Dan, joining us. Good to see you here. And thanks as always, Adam.
Thanks a lot.